Hey all, welcome to ShareTreck. This is Raj here. This is our Sunday edition. I hope you're having a great weekend, just like I have been. And today, my list of topics is going to cover my thoughts around the interest rate hikes going forward and what it will mean to us in the market. I'm also going to share my thoughts around the earnings from Berkshire Hathaway because it's a conglomerate, gives us some ideas about what's happening in the overall market. And the other topics that I want to talk to you about is around the earnings that are due on Monday and Tuesday. I have selected a few companies that I'm interested in. So I'd like to briefly mention that to you. And I have a little bit of thoughts around the price of oil and also what is happening to Russia and potential risk for the markets going forward. So let's get started. Well, let's get started. First of all, one of the expectations now being expressed by the Fed is a 75 basis point hike going forward on the back of the strong payroll and employment data that we saw last week. And also, I'm looking at the Q2 earnings from Berkshire Hathaway. Their earnings totaled 9.283 billion in the second quarter of 2022, marking a 38.8% increase from a year ago. However, it was interesting to note that the company notched up a $53 billion loss in its investments during the quarter. This should remind us not to be too critical of ourselves, as even reputed investors are looking at a red portfolio. Warren Buffett asked investors not to focus on the quarterly fluctuations in the equity investment. I think this advice applies to all of us genomic investors as well. I have bought Berkshire shares a few days ago, and I'm happy to see it was positive as of Friday market close. We'll see what happens Monday morning, and I'm pretty sure in the long run it's going to be a good share to hold. Most of the fluctuations happen in the short term. We should not let that unnerve us. There is also some serious news around Tesla. The California Department of Motor Vehicles has accused Tesla of engaging in deceptive practices around the marketing of its driver assistance systems, which are branded autopilot and full self-driving in US. This is according to a filing with the state administrative agency. And now Tesla has around 15 days to respond to the accusations before the administrative court, otherwise the DMV will take a default decision. I would expect Tesla shares to react, as California is a big market and Tesla cannot afford to be out of that market. So watch out for Tesla share prices on Monday. And if Tesla goes into a little bit of a funk, it's likely to have a halo effect on other shares and the overall market. So that's something that we have to be aware of. Now I'm coming to my thoughts around oil and Russia. So I'll start off with a brief history of this whole Russia-Ukraine issue. On February 24th, 2022, Russia attacked Ukraine. At that time, oil was quoting at around 92.81, and today it is at 88.53 and continuing to go down. And we have seen in the oil charts it has been going down for almost 20 days now. On February 24, 2022, when the war started, Russia was fully pumping oil and gas and was supplying next door neighbor Europe without much overhead cost, as pipeline was available. And since then, Russia has been sanctioned, has lots of international companies that have left Russia. This means employment has either been slashed or employment conditions diluted when local businesses took over some of the international franchises that left the country. There are reports that after McDonald's left the country, they have a Russian McDonald's out there, and after a few other cloth companies left Russia, some other local companies took them over in the malls and continued with a different brand name. So I suspect that the employment conditions would not be equivalent to what it was with the companies that left, given the fact that Russia is under trade sanctions. So those problems are also there. And Europe announced the intent to put a ban on Russian oil and gas by year end, and has already made good progress so far. In the interim, Russia sold crude to China and India, but at a discount. With the oil prices falling now, a shortage of tankers also is underway because Europe is buying crude from Middle East and US, and tankers are being chartered for that. And if Russia has to sell to non-European buyers, it needs tankers to send the crude oil. And it's also going to be very difficult for Russia to find it meaningful to continue to sell oil to Asia under these circumstances, given the lower oil price and the stronger ruble. Also, the gas business is almost likely to be at a standstill if liquefying and transporting and regasifying arrangements cannot be worked out with non-European buyers, and the ability to put new regasification plants is going to be time-consuming and capital-intensive, both of which is not in the favor of the Russian sellers. However, Russia is also a major supplier of weapons, aircrafts, and other combat systems. This will ensure that Russia has indirect, if not overt, support at this point of time. However, if Russia is locked out of getting microchips, it may not be able to service those weapons obligations and may lose ground, not only in terms of influence with those countries, but also in its market share in supplying weapons system. So at this point of time, the nuclear arsenal that Russia has and the seat at the UN Security Council are the two major assets for Russia. As Ukraine gets better missiles from the US and puts up a fight with Russia, Russia will increasingly feel the need to end the war quickly and victoriously, because when the conflict started, the world felt that Russia was a superpower and could finish Ukraine in a month at the most, and if not in a week. However, the war has dragged on for quite a while. This brings the risk of weapons of mass destruction being used in the conflict, and that can impact the markets. So please keep that in mind and do not get blindsided, because this is a latent risk which is starting to become a bit more ripe with every passing day. On Monday, I look forward to see some earnings, and those are going to be from BioNTech, Palantir, and Novavax. BioNTech and Novavax, obviously, because we are looking at the biotech sector and the genomics sector, and this will give us some ideas. I'm looking at Palantir and Marathon because Marathon, in case of Marathon, I would like to know their cost for mining bitcoins, and if they are above break-even. They had said they had a ridiculously low level for break-even. I think it was around 8,000 or something when I last heard. So I'm very curious to get a reconfirmation of that, and also see how they report their operations and how they were doing in Q2, because Bitcoin did recover a little bit towards the end of Q2. So with that said, on Tuesday, I want to see Coinbase earnings and Invite, both companies report after close, and that will give us an insight, further insight into the crypto world, as well as Invite results are something that I'm looking forward to. And meanwhile, we should remember that the QQQ is poised just below the long-term bear channel line of resistance and within a bullish pennant. So I'm hoping, like I described in my previous sessions, that we are breaking through this pennant on the upper side and moving upwards. So that's my expectation. We'll see what happens on Monday. So with that said, I think I'm at the end of the video for today. I hope you all have a great weekend, and look forward to a good week ahead. And if you like this video, I would request you to press a like out there so that YouTube can promote our video to more viewers. And if you have not yet subscribed, please subscribe and help us grow this channel. Thanks and have a great day. Bye for now.